What's going on, team? In this video, I'm framing Cerebras Systems, ticker CBRS, as a speculative AI hardware growth idea that we're forcing through the same 10-factor quality rubric you've already seen on the other megacaps. Instead of treating it as a meme or as a core quality compounder, we're asking where it lands on a structured scoreboard that looks at moat, profitability, leverage, earnings quality, sentiment, technicals, valuation, and its macro. On this framework, CBRS ends up with a moat score of 6 out of 10, which is narrow rather than wide, and a composite score of about 5.95 out of 10, which sits right in the hold band. That mix is the spine of the thesis. Interesting exposure to AI accelerators in systems with some real strengths, but still mid-pack on the quality screen and heavy penalized for valuation and technicals. The rest of the deck is basically unpacking that tension so viewers can see what they'd be underwriting if they treat CBRS as a speculative growth idea. Now, what is Cerebras actually building? On the business side, Cerebras Systems Inc. is focused on AI accelerators and systems for training and inference. The company designs specialized hardware and tightly integrated systems intended to offer an alternative architecture to the traditional GPU-centric approach, which is what most viewers will know from the obvious incumbents. In practice, that means Cerebras is selling compute for hyperscalers, enterprises, and research labs that need enormous throughput for large models. For a YouTube audience, the key point is that CBRS is levered to the AI infrastructure build out rather than to the consumer apps or a single SaaS product. It's trying to earn a place in the next generation of data center hardware. And the equity score is largely about whether its architecture can win enough meaningful deployments to justify today's valuation and the high beta profile that comes with it. Now, where does Cerebras trade today? On the numbers, CBRS trades around $182 to $185 per share, with a recent print near 182.75. At a market capitalization in roughly the $40 to $51 billion range. The headline trailing gap PE sits near 167 to 177 times, which immediately tells you earnings are tiny relative to the market cap. This is very much a high valuation growth focused name, which makes sense because this company is fairly new to the markets. Momentum wise, the stock might be down modestly on a given day, but up low single digits on the week. With a volatile post-IPO profile that you'd expect from an AI hardware story, analyst consensus is strongly positive. Roughly 80+% of around a dozen ratings are at buy. And the narrative is a bullish AI infrastructure story with price targets above current levels. The combination, rich valuation, supportive sentiment, and choppy trading sets the backdrop for how the rubric will score CBRS. Now it's time to look at the growth story and the moat. This slide is about why the model calls CBRS a narrow moat name instead of a wide moat one. Cerebras does have proprietary hardware, IP, and a differentiated architecture for AI workloads. It's not just another commodity server vendor. There is real technical depth and design work that justifies a moat stronger than none. But on the commercial side, it's still competing head-on with deeply entrenched GPU leaders in the broader ecosystem lock-in around their platforms. That competition, plus the early-stage nature on Cerebras' deployment footprint, leads the rubric to tag it as narrow moat and assign 6 out of 10. The growth story is therefore less about defending an entrenched position and more about aggressively winning meaningful deployments with hyperscalers and large enterprises, which is a high-risk path than a mature incumbents. Now we're going to look at the balance sheet, earnings quality, and cash. The balance sheet and earnings quality are where Cerebras looks better than many viewers might expect from a high beta hardware name. Debt to EBITDA is estimated around 1 times, which is modest leverage. And interest coverage is modeled near 4 times. Earnings are thin, but there is no sign of acute distress in servicing debt. The company is treated as net cash, reflecting typical growth tech cash buffers and a lack of major debt headlines. On the earnings quality side, CFO to net income assumed around 1.1 times, meaning operating cash flows runs modestly ahead of reported earnings. The accruals ratio around 0.05 suggests moderate accruals rather than aggressive accounting. In the rubric, those inputs translate to an earnings quality factor of roughly 7.5 out of 10, and a strong balance sheet factor around 9.1 out of 10. So even though Cerebras is speculative on valuation and growth, the underlying cash and leverage picture does not look reckless in this framework. The rubric strengths versus its weaknesses. When you roll the factor scores together, you can see why CBRS ends up in the mid 5s. On the strength side, you have the 9.1 out of 10 balance sheet factor, a 7-point earnings call quality score, analyst sentiment around 7 out of 10, and a macro score of 8 out of 10. Those are all decent numbers. The company looks okay on cash and leverage. It converts earnings to cash reasonably. It has strong AI infrastructure tailwind behind it, and sell-side views are supportive. On the weakness side, moat is only a 6 out of 10. Profitability is a mid-range because margins and ROIC are still modest for a hardware and business at this stage. Technical score 2 out of 10 because price sits below the 20-day and 200-day moving averages. And valuation scores around 1.4 out of 10 thanks to the 176 times PE versus an already expensive 120 times 5-year average. These weaker factors and are exactly why the composite stalls around 5.95 instead of drifting up into buy or down into avoid. Why valuation charts drag CBRS down. Valuation charts deserve their own moment because they do most of the heavy lifting in pulling CBRS down. The trailing PE around 176 times is already extreme, but when you compare it to an assumed representative 5-year average of about 120 times, it still comes out as richer than its own history. Under the rubric's relative valuation scale, that type of ratio maps to a score around 1.4 out of 10, which is close to the worst end of the range. Technicals are similarly unsupportive in the current snapshot. With price sitting below both the 20-day and 200-day moving averages, the rubric assigns the lowest technical score out of 2 out of 10. For a speculative high beta AI hardware name, having both valuation and technicals working against you is a clear reason to keep the composite in the hold band rather than upgrading it to a buy, even if the story and sentiment are something that's exciting. Risks, caveats, and model limits. What this screen misses and what it warns about. First, valuation is scored relative to CBRS own history. So a structurally expensive name can still look fine on that dimension if it has always been expensive. You still need to sanity check price to sales, EV to EBITDA, and growth adjusted multiples across an AI hardware peer group before deciding you're comfortable with a 176 times earnings. Second, the model has no cyclicity awareness. If AI capex or semiconductor margins are near cycle peak, current margins and returns, plus any low looking forward PE, can be late cycle traps rather than strengths. Third, There is no explicit free cash flow or capex burn factor. Hardware names can show positive CFO, while levered FCF is deeply negative because of heavy capital expenditure. You need to review full cash flow statements for Cerebras. And finally, the rubric structurally underrates pre-profit and hyper-growth names. So a mid-range score here is fails a conservative quality screen today, not cannot work as a speculative trade or long-dated growth position. Closing. Speculative growth with guardrails. The closing take is that Cerebras is not treated by this engine as neither a throwaway, meme, or core quality anchor. It lands squarely in the middle, a speculative AI hardware growth name with a decent balance sheet and okay earnings quality, backed by strong macro and sentiment but weighted down by a narrow moat, modest profitability, weak technicals, and very rich valuation. The 5.95 composite and hold band therefore mean interesting story, but you need explicit guardrails. In practical terms, that looks like smaller position sizing, clear time horizons, and a conscious willingness to underwrite competition, capex intensity, and valuation risk in exchange for exposure to Cerebras' potential upside in AI infrastructure. If you frame CBRS that way, the rubric becomes a tool for defining your risk budget rather than a simple yes or no verdict on whether the stock can go up.